Good morning, friends, and a very warm welcome to everyone. We'll be exploring the practical strategies that leading banks are considering
as it should be to support the credit growth. And as a result of which, I think many of the banks have been managing their liquidity risk. And then we will get going as to how to carve out a niche positioning to see that the asset liability management is made more effective and more balanced to show appreciated that CASA is the landing point of business for any bank on the individual side and current account on the business side. So these two things are the lifeline of the banking system. So when the banner reads is a great contribution to the banking system, and we should keep doing that relentlessly with a lot of focus on that. Once you have that, the other things can be discussed. Like you have the connect, the most significant point as far as the efforts of the banking system is concerned. Okay. And senior citizens accounts, and then sweep in, sweep out accounts, and things like that. Means as the technology has developed, we have brought in different kinds of technology-driven products, but the deposit franchise as such. So, and we have the scope now. Earlier, maybe 20 years ago, there was less scope for this, but now taking the data analytics as the basis, you can get different shades of the deposit franchise, which you must capture. The banking system must have a very well segmented deposit growth, uh, like we float. State Bank of India has raised 10,000 crores for infrastructure bonds. Good. So that is also one of the liability structure as far as the to supplement lending resources. So those investors will look at funding cost will automatically come down if your CASA is more. So all these implications will be there. And then whether the organization is able to withstand to the liquidity shocks, and what is the ROA and ROE and things like that. Means the investors will have a direct connect with what we are doing on the deposit franchise. That is why in 25 and Q1, the credit growth has come down because it has to be moderated. Then one state, one regional rural bank, that is about 21,000 branches are there of RRBs. Cooperative banks, about 95,000. So these are all some of the structure which I have given here just to see how we have grown in the last 10 years. In particular, 10 years I have taken. If we are connecting with the customer, what is the purpose of that? The purpose of that is to get some deposits first, then we can lend if the borrower is good, isn't it? So what I mean to say is we have done a great job as far as expansions are concerned. Infrastructure we have put. Banks are there. And we have also seen some of the banks coming up with physical branches. That is a partly digital and partly physical. So a lot of new variances are coming. But the purpose is what? In place already. And we have been reading in the newspaper nowadays that more and more banks are now again going back to branch opening. We have, of course, the small finance banks and payment banks, which are very active. So this is the physical landscape that we have evolved over a period of time. And what we have achieved in this regulatory reforms and asset quality improvements that we have seen in the because we are able to connect with the customers better. Now we have a lot of tools to see that the quality of our assets they improve. Fintech boom and digital connect with the digital infrastructure that we are using. We are using payment gateways. We are using account aggregators. We are using neobank services and many of the quantitative output. Now see the qualitative output. This is the output. If you see the next bit of 5 years, CASA ratio, deposits, this is the deposit base. Out of that, 27 has become 39.4. But if you see next 5 years, 20 to now 24 data is here. What has happened? This level. That means only two. Whereas the deposits have increased from 139 to 217. And if you see here the savings bank deposits, 36 trillion. So it is lingering on around this number only. Means there is some kind of a, if you see, look at this data, it may be different for different banks because some banks may be doing, focusing more on CASA or savings bank deposits. But this particular segment, first liquidity risk, it will be high. Interest rate risk will be high because for the term deposits you have to pay more interest, and the number of accounts have become by in March 2024 265 crores. Those who are not, because our financial inclusion index is still 67, that means 33% of the population is not yet connected to the formal banking system. That means there is a lot of gold mine which is lying, amount down below 122 crore accounts carries 63.83 trillion deposits. And as far as March 2025 is concerned, this is the as far as the deposit trends are concerned. Now let's look at some other aspects. Okay, this is ALM structure. Now suppose you have 100 rupees with you. Okay, suppose you have deposits of 100. Same is 1 to 3 years deposits were 26.2%, which has come down to 24.7. But they will be exposed to interest rate risk unless you support them with strong deposit base. Not very much focusing on that. We are focusing more on the near term credit deployment. Near term, so that our interest costs are better managed. So I'm just putting these before you because there is a lot of efforts which have been made to gather all this information. At least it should, its usage should be multiplied by sharing with others who are, now there is no person in the banking system who will not be concerned about the deposit growth or the credit deployment. On a 212 trillion deposits or a 227 trillion, now say 230 trillion, what is the percentage? That means in terms of the growth, that particular time bucket should have increased, but it has not increased in that way. That means proportionately the business is not going. That is why term deposit share, if it is dropping, that means uh, 50.54% was going to term deposits. It has come down to 45. That means it is going to 50% of the deposits of households used to come to the term deposits of the banking system. It creates a growing, those customers are going to be the base of our banking system. So this is what is happening. Like share of household savings, 15.7%, which are going to continue. All these three reasons, household savings, depositors erode as households embrace capital markets. More and more people are moving towards capital market, so it is going to affect that. Households, low government spending is also causing some kind of depletion in the deposits of the banking system, current accounts, you are now government business and things like that. And so you are operating PPF, you are operating senior citizens account and Sukanya Samriddhi account. And maybe many more are there. I am not very much, but these are our fixed deposits are getting shifted to these because they are giving fixed interest rates. Interest rate risk is low, particularly in a diminishing interest rate scenario. This is going to continue. So this is another reason why our deposits are falling. That which are going to have a longing impact on the credit, on the deposit portfolio. So what is the cumulative impact of fall in deposits? It weakens competitiveness.
Thank you for giving me time to talk to the participants for 5 minutes in between. By Shri M.S. Sundarajan, former CMD Indian Bank, and the topic is something again very interesting: the future of work and the talent landscape in banking. It is something which is going to impact the banks for a very long time, and whatever steps are taken today will have a very long term effect.
Three aspects as far as the conversation so far is concerned. First is there is a slowdown in the deposit growth, and also, more importantly, the CASA growth. And RBI urges to focus on innovative deposit mobilization. Now, people will not say what you should do or what not to do. It is up to the line management at the grassroots level. But the data analytics, if you have, it will facilitate money laundering activities. So the revival of dormant accounts and centers for financial literacy of the RBI, and try to revive the accounts. All of us know very well RBI has introduced regulatory sandbox in 2019. So you can do lot of offerings to the two things have to happen along with without credit there cannot be deposit. Nowadays, of course, microfinance people are not doing because of certain risks which are precipitating in the system. Otherwise, there has to be a rotation as far as the deposits and advances are concerned. They should go together. So customized offering, we can find out. So regulatory sandbox can be used for this purpose and we can engage, which will ultimately be flowing back into the system. So that's the purpose. And innovations, use of so sandbox environment, and then thematic retail deposit schemes you can roll out, which is going to go up to 347 million. So banks should develop an age profile of customers so that we are in a better position to garner their savings, their fixed deposits, because they have low risk appetite. And now 5 lakhs is the insurance now, which was to be increased. That moratorium was imposed. At that time, there was a lot of talk that it will increase and all, but still now I haven't seen that. And now the New India Cooperative Bank is merged with which bank it has merged? It is merged with so Saraswat Cooperative Bank is now taking charge of that. So the point is, senior citizens must be kept at the interinstitutional. Now forget about deposits. Interinstitutional connect itself. Now, do we have a database with us will be much in proportion higher when compared to individuals. So value-based services we must. More CASA reduces the cost of funds, that everybody knows, because every time, every quarter and all that funds will keep coming. Now he will use or he will not use is a different issue, but there will be deposits which are going to come into the system. And augment interinstitutional deposits. This is what I was talking about, the interinstitutional deposits and retail deposits, how you are going to expand. And this requires a social approach in penetrating the retail segments. That is, you should participate in financial literacy drive. These are all some of the strategies which we have been using for many years. But many of the new age bankers, they are not very much comfortable or familiar with these things. But actually, our money is lying, means more customers should be added to the kitty, and along with that, incidentally, some deposits will come. So the interinstitutional deposits and individual deposits. Mix of wholesale and retail. Entities, what is the deposit? Individuals, what is the deposit? Women, what is the deposit? Students, what is the deposits? Businessmen, what is the deposit? Now, if you are not having, then you will never be able to target those segments. And now, bundling of products. Now, bundling of products is very important. Many of the new age banks, so some wealth management products, we will also open your demat account. We will also open your trading account. We will also provide you health insurance products. We will also give you life insurance products. Something like that means all in one kind of. The only effort that we are going to make here is we are reminding you, all of you, that please work on them again, because they are the time tested strategies to get new customers on board and new deposits on board. It has to come from the existing depositors or little incremental increase in the customer base. So solution based platforms. So POS services we can give, we can offer. If suppose somebody is having a current account with a balance of 10 lakhs, then free sound box can be given, something like that. We are all doing all these things, but because they want to have tie up with us? Because we have the wherewithal with us. We have the customer base, 265 crore accounts. It's a massive account base that we are having. Public sector banks, 2.1 product per customer. But if you see, India is a dense country with 265 customer accounts with us, then the and 265 crore accounts. So our now the only thing is little sensitization about that. That is why I was telling about mapping the cust ID with number of accounts, GDP, and credit to GDP ratio, and deposit to GDP ratio, and find out which are the areas which are not fully tapped. Like Kotak Mahindra, RBL, and Federal Bank are targeting districts with high deposit growth potential, and separately for new deposits, new deposit accounts. Now, are we able to segregate that? Now, what is the income level of people who are residing over there? Maybe that we will be able to get some kind of data on that by using the for a common cause, because all banks are in the same kind of environment as far as the business requirements are concerned. So these campaigns and all can be launched. I don't say that we have to join in the campaigns done by others. Of course, as far as the improvement, that operational improvement is shortening of turnaround time. And continuous improvement, KPIs should be aligned to the new deposit accounts and pricing per customer. Now, per customer deposits. If you want more business to come to you, if you want more deposits to come to you, more sales of loan products, customer centricity is the most crucial dimension of service industry. And integrating explicit how you respond to the customer requests or customer queries, or how you are fair in a quick redressal of grievances with empathy and consideration. These are all some of the things which have been very well highlighted. Even RBI has, if you have read the recent monetary policy, so this is the most important aspect of customer centricity. And we do not have the enough data. Now, what is the gist of our webinar? Because of 45 minutes, the budget is over. So, gist of takeaways from the webinar: we have tried to look at review of deposit franchise. We have seen how deposits have moved. That means the wealth of customers are lying in the hinterland. Structural shift, how it has happened in the different components of ALM. And digital and physical presence of banks are now, having built the infrastructure, we must connect with the customers. Transformation, how the banking system has transformed, that we have seen, and growing risks of ALM imbalance, SVB Bank and all those things, how they have failed. What are the dangers of ALM risks? Slowing deposits, they are non-transitory, that we have seen, the demographic profile and habit of savings and gross domestic savings, propensity to save, shifting of deposits to government-sponsored
Correct.
schemes.
See, when banking started, mostly people were talking about so naturally you have to search for fund, whether you will liquidate your investment or mobilize deposits. But then Reserve Bank does not allow for mobilization of deposit, you give some incentive.
Yeah.
What exactly you are doing is you are giving incentive to the customer directly rather than to the middleman. They are selling a lot of products other than deposit product, or they will give priority to the product where some incentive will come to their pocket or to their relatives pocket. If they are selling some product where their relatives are advisors or so this is what actually banker is advising me, instead of mobilizing deposit, he is mobilizing insurance funds. So when the share of saving, financial saving in deposit is coming down, and deposit growth will lag behind the credit growth. Maybe it is a part of your wholesale strategy of mobilizing wholesale funds. These are some of my observations. Actually, I thought I should share with you that banks have to face the competition to mobilize deposit both from wholesale and retail segment, because the customer profile is changing very fast.
Segmenting, because you see today uh, deposits are not the only way in which the resources would be garnered by the bank, and also knowing that the customers today would like to venture out to places and to various different options which are available to them for optimizing their returns, and times are very fast approaching when the banks will have to work on very reduced or thin NIMs where the money is going. For example, mutual funds, what they're trying to do is trying to invest into the market only, and knowing the places where they're investing. In case if we create a marketplace, we are trying to do two things. One is that we are trying to shore up or open new CASA accounts, new opportunities for the bank, and also trying to earn in the shape of fee-based income also, and also trying to see that the other income is augmented. So that is one aspect that comes to my mind, which can be done. That's an inspiration for the accounts or for the account holders to maintain more balances in your accounts in comparison to what we generally feel. Because in case if we increase the rate of interest across board, it might create a big dent on the bank's cost of deposits. So two more things in case if you could educate to the customers, keeping in view the age band, probably will help the banks to augment the resources better.
This B2B contacts, no, and inter-institutional deposits.
Yeah.
These are the binding force between the retail and the wholesale.
Right.
So one has to balance between the two.
My basic question and the additions that other senior mentors have added, thanks for that also. My basic question is that's we are talking about the shrinking saving bank deposits.
That is also cross-selling. See, cross-selling is, I think, Sunil sir, he will be able to better give us the information because he has more grip on the AI tools that are there. The effort that we need to do is what is the ratio of customer ID?
As you rightly said, sir, it is required for creating more stickiness in the
Yeah.
behavior of the customer. And the example that can be taken is today, for example, in case if you are creating an asset account, say, for example, a loan is being given, and in case if you ask the customer to open the CASA also with you, that
But
kind of
debit card also comes into that because debit card is an accompaniment of account, but
account.
credit card, yes.
Debit card also is not compulsory to be given, so customer has to be
Yeah,
asked. Coming to
Okay,
that
sir.
stickiness part, I also used to tell my people at that time, one aspect which we ignore is the bill payment thing. Most of the time, it has been taken over by credit card people, that too by mostly private banks. But we did not explore it because we never felt that it is also going to give us an increase in our deposits. But And then he thinks that rather than closing the account and doing all that effort all over again, it's better to settle the issue with the bank itself.
You know, um, don't you feel that the savings bank interest rate is somewhat misaligned? And this interest rate given by different banks are completely
Sir, another aspect, which comes to my mind while Boy Saab has said this, increased rate of interest.
in savings, and some of
Yes,
them are
yes.
giving minimum 10,000 or 15,000 minimum balance requirement is like ICICI Bank. Now they have reduced after the RBI pushed them to reduce that. So that is one aspect which is again going to be playing on the minds of the account holders who are going to be there. So I just wanted to view your observations on that.
That is given mainly for the financial inclusion. And if your balance is zero, naturally interest that you are getting is also zero. That's why it is better that you should have a graded kind of graded savings deposit interest rate. It's better to incentivize. Customer will feel say proud that I am banking with a bank which is taking care of me.
The trade-off in your kind of approach, as Dr. Boy was saying, no?
And as we come to the close of this session, I once again extend heartfelt thanks to our esteemed speaker. And sir, we thank you for your wisdom and clarity. And I'm sure the insights that you have given today will be invaluable to all of us in our future working. And a special thanks to Bhoi sir and Sunil Soni sir, to our attendees for their brilliant questions and active participation. And as a follow-up, please look forward for the communication from us